Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Wednesday, August the 17th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in this live session to go over the market, macro to micro, take a look at the structure of the market, and we drill down to our trade levels, our targets, and our hypotheses for the day. Usually we create 3 to 4 hypotheses so that we can see what we're going to do and plan for what we're going to do in each of the different scenarios. This is a subscription room, so if you're interested in checking it out, I will put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are real retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so if you're interested in checking it out, just send me an email at quantumleapfutures@gmail.com or give me a call or send me a contact request at Doug_McKay, or if you want to watch more of these videos, there's over 400 days of these videos on YouTube. And if you like what I do, follow me on Twitter at Crazy2. So yesterday we opened auction out of range. We were looking for a wide opening swing, which we did get. Hypo 1 was a open auction up into the 83 to 84 to 86 area, and then responsive sellers in a rotation down through to 79 and down to test to 74. Hypo 2 was an open auction out of range. He moved down and then a rotation up to take out the 83 and a quarter. Basically, we had a very, very tight trading range yesterday, kind of a hypo of both, a hybrid of the two hypos together. We got a late day push down to 75 and a quarter. Marvin, you owe me $1. We got to the 80. We didn't get to the 80 and a quarter, but we did break the 76 and a quarter, which was Marvin and I were discussing which would break first, and I was saying 76 and a quarter. He was saying 80 and a quarter. Since then, we just we created another balanced day, and we closed at 77. So really another tight day. What was the range again? We had 82.50 and 75 and a quarter. So 7 and a quarter. So 4 ticks greater than Monday's range. Very, very tight. Okay, taking a look at the news. Not much news. We've got crude inventory at 10:30, and then we've got Bullard speaking at 1, and then the big one is going to be the FOMC meeting minutes. Be interesting to see what they had to say. Stepping back just quickly, taking a look at the macro. I like to use a basic candlestick chart with a 9 EMA and a 20 SMA. I'm looking for slope and separation for strength of trend and where it's being violated. In the last few years, very strong trend up. End of 2015, beginning of 2016, we violated that trend. Then we got back up above the 9 and the 20 for the last 4 months, and so far this month, and we're getting continuation, and we're starting to get slope and separation to the upside. Going to the weekly, you can see that again. Now, I mentioned this last week. We have 1, 2, 3, 4, 5, 6, 7. There's only 2 instances in the last 20 years that we've had greater than 7 weeks of positive bullish weekly candles. One went 8 weeks and one went 9 weeks. So far, we're in our 8th week, and we are getting the first possible bearish candle. Our open of the week is 76, so we're just trading just above it, or just below. I'm sorry, our open was 80.75. Last week open was 76. Sorry, my notes are mixed up there. So we are below the open of this week, and And we do have this technical gap, a move down to close the tech gap. It's going to bring us into that 2150 area. But overall, the strength of the trend is very strong on the weekly. Going to the daily, again, we've got slope and separation. We're losing a little bit of slope, and we're just starting to go a little bit sideways here. We had a bearish engulfing candlestick. Now we have an abandoned baby on the RTH candle. I'll show it to you when we get to the composite. So I don't know how valid it is because we're not using the full session, but it is we do have a bullish, a bearish engulfing candle on the full session, and we have an abandoned baby on the RTH candlesticks only. We are testing the 9 EMA from above, 76.75, a break below that. Look for them to come down and test the 20 SMA on the daily at 70.50. But overall, the trend is still intact, but it's getting challenged right now on the daily. On the 4-hour, a little bit of a different story. We are getting slope and separation to the downside. We do have a naked cross here at 82.25. Just writing that down. And that is on a 4-hour candlestick, so that doesn't necessarily mean we're going to take it out today, but it's a target. If we get above the, I'd say 80.25, I'd be looking at that as a possible destination. Going to the 1-hour, you can see that we've had this strong downward trend, and they tried to take it back overnight, failed to hold above the 9, got back below it, and so far, failed to get above the 20. And so far, we do have a downward trend, but it is being challenged right now at the 77.25 area. Going to the 30-minute, same thing. We've got this downward trend, but we're right now we're challenging it. If we get above the 77.50, then we're violating it, and we could get a reversal pattern setting up here. But right now, we still have downward trend on the 30-minute. On the 15-minute, we are above the 9 and the 20. We are in consolidation. We've got a possible start of an upward trend. We've got a naked cross up here at 79. So on the 15-minute, and then going to the 5-minute, we got solid sideways consolidation and a bit of a symmetrical triangle setting up here on the 5-minute. Going to the big picture composite, this was the abandoned baby I was talking about. Again, I'm not sure how valid it is in terms of a candlestick pattern when you're not using the full session, but we do have a bearish engulfing on the full session. So combine that with the abandoned baby on the RTH with the bearish engulfing. Sorry, I just lost my internet on my other computer. I'll have to worry about that in a minute. Anyway, right now we are trading right inside of this balance right here. Our how many days is it? 4, 6, 8 day microcomposite VPOC is at 77.50. We're trading 76.50. Our value area low for the microcomposite is down here at 75. I'm watching that 75.50 area, and then our value area high is 83.50. Our key line in the sand right now is 72.50. Below that, I'm looking for a bigger move back to test the value area of the balance that we just broke out of, and the microcomposite value area high at 67.25. That is also a CHVN, and then just below that we've got 65.50, and below the 65.50 I'm really thinking we're going to get a bigger move down. We've got a lot of naked VPOCs and a lot of repair work to be done below the 65.50 area. We've got naked VPOC at 64.25, I believe. Another one at, well, let's go take a look at them. So here we are. and we're trading, just underside yesterday's value. Now, I wanted to show you this. Yesterday and Friday, we were talking about this yesterday, the profiles are very, very similar, and all the levels are within like a couple ticks of each other. 79, 79.50 for the VPOC, value area high 81 on Friday, ended up at 80.50 yesterday, value area low 78, ended up at 77.50. So about 2 ticks away on pretty much all the key levels, including like the LVNs and the HVNs. But we had a little bit more extension by 1 tick below the 75.50. Below us, we have our month open at 74. We've got our naked VPOC from last Wednesday at 72.75. We've got the naked VPOC at 64 and a quarter, 59.75, 53. So we've got a lot of repair work. We've got gaps below and naked VPOCs and naked closes below us. But currently right now, we're trading inside of the range from yesterday, but outside of value. So a key level above us is going to be the 77.50, and of course below 75 and a quarter, I would look for them to come down and test this the month open, but I'm really watching for them to come down and test the 72, 75 and take this naked VPOC out. We are seeing the first, bit of bearishness coming in with the shift of the VPOC down. We have a lower VPOC from the prior day, and we left this 83 and a quarter, so we gapped below the 83 and a quarter and did not come back and take it out. And so we're seeing some weakness coming in. In terms of the overnight session, we have a high at 81. We have a low of 73.50. We did test overnight below the month open, and then we bounced above. And our VPOC is not likely to shift. It is at 77. And that's about all the information that is relevant for overnight. Inventory is neutral from overnight. So taking a look at levels, obviously 75 and a quarter, 77.50, 80.50, and then 82 and a quarter. And then all our levels above remain the same. We should have a level here at 87. And that's about it. I just want to take a quick look at the flex levels, see what we've got above us here. So we've got that measured move up here at 93.50. And we've got a measured move at 2209.75, and that plays out with the rule of 10. And the dates range on here, you can look at them. They're 8.2 to 8.9 to 8.10, 8.2 to 8.9 to 8.10, and that's the 2 fib extensions on it. We've got gap zone below, and we're sitting at the microcomposite VPOC. Sorry, the gap zone is down here. We also have a gap zone above now as well. So a lot of repairs above and below. So in terms of hypotheses, it's going to be very similar to yesterday. I'm looking at, although we're going to open up probably in range, I'm looking for open auction in range, maybe inside of value, depending on, we still have a half hour to go. I'm looking for a rotation up, a false breakout. I'm looking to take out the 79.50, test the the range high from yesterday, test the gap zone, take out the 83, and then failure, somewhere between the range low from Monday and the range high from yesterday, and then rotation down through and down to test the 72.50 area. So hypo 1 is an open auction in range, a move up, finding responsive sellers up in the 82 to 84.50 area, and then a rotation down. Hypo 2 is an open auction in range, outside of value, a move down to the 72.50, find buyers down here, chop around, and then rotate back up through into the 79.50, chop in the upper distribution of the prior day with a late day probe into the gap zone and take out that 83.25. Main target being the 79.50 after rotation down. So that's hypo 2. Hypo 3 is an open auction in range, chop around, maybe take out the 79.50, come down, test the 72 level, and then fail and push down through into the 67.25, 66.50. Our 20-period daily ATR is running at 14.5. So off of the high overnight, our downside daily ATR target is 66.50. Our upside daily ATR target is 88. So these hypos are well within that daily range. And the fourth hypo is an open auction in range, a push up into the gap zone, chop in the gap zone, and then get continuation and come up into the 89.50 area and back inside of Monday's range, and start working our way back up towards that 2200. So those are the four hypotheses. You can see that we've been riding since we had this double Renko reversal right here off of that 90.75. We've come down, and then we've basically ridden the Keltner center line down in a downward channel. So just be aware that we do have some downward drift going on right now, and it's likely to continue until we get up above the 83 area and get through that gap zone that's above us and get back into Monday's range. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.